Hello and welcome to C-Suite Secrets. I'm Heather Parsons, your host. I'm a serial entrepreneur, fractional CFO, and a business strategist. I've spent years juggling business, family life, and all while helping entrepreneurs scale, optimize cash flow, and build real financial success. On our show, we'll bring you conversations with founders, executives, and operators that actually move the needle in their business. No fluff, no filler, just smart strategy, systems that work, and insights that you can put to use in your business right away. With that, let's dive right in. Today, we have George Birrell on the show. George, welcome.
Thanks. Thanks for having me.
Glad that you're here. For folks who haven't had a chance to get to know you yet, tell us a little bit about yourself and your entrepreneur journey.
Sure. I'm a CPA, founder of TaxHub, which is essentially a virtual tax firm that helps with tax, and we do offer bookkeeping services as well. Small businesses and startups, essentially. I went through the traditional route of a CPA. Got my bachelor's at Loyola University in Chicago, then got my master's degree. Went on to sit for the CPA exam, went into public accounting, worked in public accounting, started in tax, and then moved over to audit, stayed there for 5 or 6 years, then went into controllership and CFO, worked for a few firms there, engineering type firms. And as I was doing this was about 6 or 7 years ago. I saw the opportunity to start an online virtual tax prep firm because I knew there was a hole in the market, and that was before like TurboTax even launched their full service product. So we were literally like probably the first or second online virtual CPA firm. Um, which is nice because Google still gives us preference for that in search engine optimization. So, but yeah, that's worked out well. It's myself and another CPA, and then we have a few other CPAs that help out during the or the busy season. Um, we opened an office in Bangalore, India, a couple years ago. That's the way the industry's going. There's a whole in Bangalore. There's a whole the big four all have huge offices there. So we pick from people who are sick of working for the big four, that are highly trained, extremely knowledgeable in tax law. So that's worked out well, and we've just been sort of growing. And the type of customers, like I said, are either fall into two categories: higher income, small business people, or startups that are seeking capital. Um, we kind of have a wide net in that as far as that goes.
That's great. I know tax is something we always get a lot of questions about. So I would love to hear your take on what are some of the mistakes that people make their first few years in business that really impact them from a tax perspective.
Well, the main mistake, it depends on what kind of business you are. If you're a business that's seeking investors and capital, a traditional startup business, there's a set of mistakes that I see them making. But if you're just a small business, one or two owners, partnership type business, um, the first, because we're the entry point for most businesses. So the first mistake we see is people getting excited about their business, spending all this money, setting up an LLC or a corporation. I would highly recommend against forming a Inc. at all, unless you're seeking capital. Um, and then setting up spending all this money, setting up accounting systems. I would focus on top line revenue if you're a small business, and then once you've found a revenue stream and a sales funnel, then all the accounting and back end administrative type stuff can be done after the fact. So that's sort of the main problem we see. I mean, there's, as far as like tax strategy, as the business matures and profitability grows, that's when you start getting into strategic mistakes where business owners don't realize how to structure the business property, like when to form an S corp or a partnership or a C corp. But yeah, that's kind of the what we see. And then so with our clientele, once they get to like the Series A stage of funding or something, then we sort of pass them on and they go to a more full service accounting firm.
That's a great way to look at it. I think, you know, focusing on getting your revenue going up front is definitely crucial, especially if you're not looking for funding. I'd love to also dive in a little bit and talk about one of the things that I see all the time is people commingling funds. So, how does that impact you whenever you go to file somebody's taxes and possibly impact their tax expense?
Yeah, that's definitely an issue. That's a great point. I forgot about that. Yeah. So a lot of people who are just what the industry calls side giggers, people who are usually working full time but want to have a side business. That we see that problem a lot with those types of clients. So really the once you structure the business, you can get access to banking for that business entity, so you can open a bank account. So we're very adamant about once they form the either the LLC or partnership or corporation at the state level, to open a bank account immediately and start transacting, and not to commingle funds. Some banks will let, as a sole proprietor with no entity, separate legal entity, they'll let you still open a bank account. It's we've found that some businesses have trouble opening a business account unless they have an actual legal entity. But so yeah, when that happens, I mean, there's not a lot of you can do. You can connect them to like an online bookkeeping system, their personal bank account, but you have to suss through every transaction and determine what was a personal expense, what was a business expense, and then once you determine it was a business expense, then you have to determine the categorization. So that's a huge faux pas that we see a lot with small business people. With businesses that are looking for capital, they usually don't have that because there's more than one founder involved, and so they just open a separate bank account from the get-go and each contribute their own startup capital.
Absolutely. And that's great. I think keeping those thoughts a little bit separate, you know, going the route of raising capital, bringing in investors, I think it's really crucial to have a system and a process in place. It not only makes you look more professional, it makes your investors have a little bit more confidence in what you're doing, the product that you're offering, and that you know how to run a business. For folks who are maybe in the earlier stage in business, not going that capital route, commingling funds is nothing more than putting your personal money in with your business money. It makes the accounting really messy. It usually costs you a lot more in bookkeeping fees in the end, and it takes
Yeah,
longer to get your taxes done for sure.
yeah, definitely. The Like I said, the solution we have is we either send them like a financial statement template and say, all right, you're going to have to suss through your personal bank account and pull out the income first, and then all the expenses. So we sort of push that on them unless they're willing to pay for a bookkeeper to come in and um, go through all the whole year's worth of transactions. There's online bookkeeping is evolving, especially with AI. There's some products coming out or that are already out on the market that use AI to help categorize, and it's some of the products. I don't think too many companies have this, but they have products that can, based on machine learning, decipher, or at least with a certain degree of probability, decipher between business and personal expenses. So hopefully as this AI revolution increases or evolves, that won't be as big of a problem. But yeah, that's definitely
Yeah, I
something.
love anything where we can plug in AI and take the time and make it shorter and make it easier for people to operate. From my experience, it's kind of like I think about QuickBooks rules and getting it to automatically categorize things. Um, you still have to look at it. You
Yeah,
still have to be mindful. You still have to pay attention because for a lot of our clients, whether they're on the bookkeeping side or the fractional CFO side, you still have to look at it. And a lot of times go back and double check the work, especially if there are payments coming in where interest and principal need to be split out. It
yeah,
tries to be very helpful and it's usually very smart, but it also comes with a lot of challenges as well. So I think we'll get there and that'll be wonderful, especially for most business owners. I'm just
yeah.
not convinced that we're quite there yet.
Oh yeah, you with bookkeeping, like say you have a construction business, we have this with clients quite often, and they trade in a truck. People, especially in the construction industry, people are trading in like trucks and fixed assets all the time. Online bookkeeping system has no idea how to calculate the gain, do a 1031 exchange. So yeah, that definitely requires human intervention. And even from what we've seen, our clients that use other bookkeepers, they have problems being able to calculate a gain on a transaction like that. So yeah, there's always situations like a couple times a year for most clients where you need a high level bookkeeper or a CPA to step in and book the transaction. So,
That's a great point, and you also brought up probably one of my favorite tax deductions. Talking about trading in vehicles. I'm sure you get asked about that a lot.
yeah.
So tell us a little bit about the benefits around Section 179 deductions or other things that most general business folks should be looking for whenever they go to file their taxes.
Well, with vehicles in particular, the first thing we tell clients is log your miles, because it doesn't matter if the car is either in your name or the name of the business, but if you're using it for both business and personal, you have to have a mileage log. And then as long as you have that mileage log, we can calculate the best either using standard mileage rate or actual expenses. We can calculate it, but we need that mileage log because we have access to all the other expenses. So the first thing we tell them. As far as like taking advantage of depreciation, you have the classic Section 179 depreciation that fits most business owners. Bonus depreciation, which is going away. It started out at 100%. Now it's down to, I think 2025, we're down to 40% or 60. I can't remember. But anyway, yeah, that's sort of the option. That as long as when we do the tax return, as long as we've recorded the asset properly, we can optimize for depreciation. The software does most of that for you, but we need the information recorded properly. So that's where the challenge comes in.
Absolutely. So that's a great point. So, at the end of the year is not the time to start looking at all of these things. So we're currently just at the start of June, and we're halfway through the year. We're getting close to that. So this is stuff that you need to, if you've not already started, you definitely want to go back and take a look at that and get it moving today because this can be thousands of dollars in taxes that you're paying that you may not have to because you're really taking the activity and operating your business with it but not getting the full benefit.
Yeah, definitely. That just goes part and parcel with staying on top of your bookkeeping and making sure you have the right expertise available to help with those unique transactions. The standard transactions are, like you said, easy, and the software picks up on those. But yeah, you
Yeah.
you definitely need to, for those unique transactions, stay on top of it.
Yeah. And one other question I get a lot that I would love your take on, I get asked about people hiring their kids all the time. So, what is your take on entrepreneurs hiring their kids to work in their business as both a way to generate wealth long term and to create a tax deduction?
Yeah, we employ that strategy with some of our higher income clients. The first thing you have to be able to prove to the IRS that they're providing real value to the service. So we've had some clients that want to employ a 2 or 3 year old child, and I tell them, all right, what are they going to do for the business? And I say, unless you're using them for like promotional reasons in like advertising material, there's really not a lot you can pay them for. But there are unique situations, and we do have clients that I tell them, all right, if the only way you're going to be able to pay your children that are 2 or 3 years old is if you're using them for advertising purposes, basically, because the IRS uh, isn't gonna allow like a 2 year old to be paid for admin or filing or bookkeeping or anything like that. So, and if you do get audited, they will question that and say, and if they know the age of the person, so there's not a lot of leeway there. So yeah, paying your children, that's the first thing, is to make sure there's a real benefit to the business. But if you can get past that hurdle, yeah, definitely employ that strategy. You can shield up to around 12 to 13,000 um, per child without them having taxable income kicked in. So if you have 2 or 3 children and you're in the 30 to 37% tax bracket, and you're shielding 30 to around 36,000, then you're saving almost a third of that. So you're saving like 10 to 12 grand. So yeah, that's
That's
that's a good strategy.
Yeah, it's great. It's not only a saving strategy, but it's also a way to really help your kids start saving at an early age as well. Because if they're at that, 10, 12, 13 age, they probably don't have a lot of expenses. So they can go ahead and take that money and either put it in some sort of investment vehicle or start putting it aside for, later in life, whether it's buying their first property, whether it's, hopefully not something like going to school. There's other avenues for that, but it's just to really give them that boost and start moving forward.
Yeah, the ideal scenario in that situation is to have them put it into a Roth IRA and have that, because they don't need it's post-tax money, so the children don't need the deduction. And then from with time value of money, you give a 10-year-old, the 15-year-old 10,000 a year. By the time they're 50, it's going to be in the seven figures. So if you put it into a Roth IRA, and that's all post-tax money, so they can take it out tax-free. So that's the ideal scenario with that.
Absolutely. And if they want to withdraw on those contributions, that's something they can do as well. And they can also borrow against it. Some entities are willing to do that and use it as collateral. So anything that you can do to set them up early and get them moving in the right direction, the better off they will be, and so will you.
Yeah, you can't actually borrow against a IRA or a Roth IRA. If you want them to be able to borrow against it, you can set up a 401k. That's another vehicle, and that makes those contributions a little more liquid, because if you set it up right, you can borrow against those funds. So yeah, that's a good point.
That's a great thing to clarify there. I definitely appreciate it. So, one other question that I have and that I talk to a lot of founders about is about becoming more bankable, trying to get more access to lines of credit, other funding. So, even if they're not going the VC route or trying to raise capital that way, what are some of the things that they can do to make sure financially they're set for that?
Really, if you're looking for credit for a small business, the bank or the credit card company, they're gonna usually ask for your tax returns, because that's the one sort of third party documents or set of numbers that establish trust. So having a properly filed tax return would probably be the most important thing if you're seeking credit. And then just managing your cash flow wisely, making sure that you're not overdrawing your account. That's always a huge red flag when uh, commercial lenders are assessing your credit worthiness. So those 2 points are probably the main things that I would focus on as a small business person.
That's a great point as well. So cash flow is something that we focus on a lot, and really being able to understand what's the money coming in the door and what's the money going out the door. I think for any business, no matter what your end game is, if you get that dialed in early, your life will be a lot easier along the way.
Yeah, definitely. I mean, in today's day and age with credit tracking, you definitely need to stay on top of that because it will come back and bite you in the end if you're not on top of that. So, good point.
Yeah, for sure. And folks can also pull their business credit report. If you're trying to establish business credit, you can go out and you can get that report just like you do for your own social security number. So it is being tracked, even if it's not as easy to get to. So definitely want to keep an eye on that.
Yeah, yeah. Who I can't remember the name of the organization that tracks that, but yeah, it's you're being watched. The entity, once you form that entity, it's as long as you've filed a tax return, it's in the system and the EIN is being tracked.
That- That's a great point. So EIN is just like another social security number,
Yeah,
way to be
exactly.
tracked. It's its own living, breathing entity at that point.
Yep, yep.
Well, awesome. George, this has been an awesome conversation. One other question that I have for you before we wrap up, I'd love to hear what's one thing that you wish you would have known starting out as an entrepreneur and going forward with TaxHub?
Um, that's a good question. There's a lot of things. I guess the main thing is really what you need to be prepared for, and this isn't really a financial consideration, it's more of a lifestyle consideration. Um, you're going from most people, like I came from a corporate environment where I did the 9 to 5, going into the office every day, working in a big company, working surrounded by people, um, and then leaving that and going into work, basically working out of a home office initially, being able to discipline yourself and manage your time because you're not beholden to that 9 to 5 clock that a typical employee is. So that was, for me, that was the biggest change because I mean, I was in the corporate world my entire life basically, and I had this mindset that where like I go into work, I work for however long, depending on time of year, anywhere from 8 hours to 12 hours a day. Then I go home and I'm done. When you're self-employed and you're working for yourself, you have a whole 24 hours a day to choose when you want to work. So you have to stay disciplined and establish sort of a schedule to help you accomplish what you need to accomplish every day. So that's probably the biggest point as far as jumping into the entrepreneurial world is just be prepared for that complete culture shock that you're going to experience.
I think that's a great tip and a great thing for other entrepreneurs to think about. If you're anything like me, you definitely want to be an entrepreneur because you want that time freedom. But I think to your point, being very disciplined along with it is a huge advantage. And the sooner you get that discipline dialed in, the easier life becomes.
Yeah, that's true. Time management when you're starting off is paramount to success, I think. So I completely agree.
Yeah, because at the end of the day, the buck stops with you as an entrepreneur.
Yeah,
So,
exactly.
well, it's been great having you on. If our listeners want to look you up or connect with you, what is the best way for them to get in contact with you?
You can go to our website, gettaxhub.com. Um, and you can schedule a free 5-minute call. You can just search "talk to a CPA." Um, we come up like 2 or 3 in Google, and you can have a free 5-minute call. We have a bookkeeping page where you can book a bookkeeping introduction call. So just anywhere through our website or through a normal Google search, we have a pretty good online presence. So it's not hard to find us.
Awesome. Well, thank you all for listening. If you found today's conversation as valuable as I have, be sure to hit that like and follow button. And until next time, keep on moving forward and remember that you don't have to do this alone.